Ladies and gentlemen of the crypto space, we're live on a Friday, February 4th at 11:30 a.m. Bam! Right on time today. We're the fear abating for a little bit, of a bear market rally. The clouds are parting. Got a little bit of clear skies, you know, metaphorically speaking, of course, albeit we do have clear skies today as well, so that's nice to see. Dollar bearishness over the last 2 days is good to see, and that's exactly what relieves the pressure on the markets, especially combined with the story that bonds are telling. Bonds are selling, and dollar down. Where's the capital going? What are they doing with it? And these are the big questions. Dollar down means there's less pressure on international markets and international capacity to purchase dollars to meet debt servicing obligations, and there's less pressure on the system. That means they're meeting their servicing obligations, and they're not pushing up the price of dollars because they need dollars. Means there's less demand in the market for at a forex level, and there's less fear in the market. Bonds are selling; they're not buying. It's not like we got a risk-off situation like immediately on the horizon like today. So this all contributes to a sense of fear reduction, and as fear reduces, you get capital that gets deployed into the market. There's so much uncertainty at the macro level. I don't necessarily see like a full-on bull market. And the reason we had such a bull market over the last 2 years is because of the intervention that just overwhelmed the market. We don't have that setup right now. The intervention has been cut. There's no more transfer payments, or they've been reduced from a stimulus perspective, and we got shit shows all over the place, and real estate and taxes and domestic complexities that are just going to spiral in many regards. So the macro conditions have a great deal of uncertainty at the longer time frames, but on the shorter time frames, we will have a little bit of relief today, which is obviously by definition a bear market rally. Dan's in the house. Boosters here. Captain, for your CVX bribes, I opt for Frax. Frax is getting close to FPI, and let's take a look at the Frax chart. Let's take a look. So Frax got hit hard, but this is the purple region is the price action congestion zone that I look at. And thus far, if you really zoom out, which is all I care about, is 1, 2, 3. We got higher lows across the board. Let's see if there's a trend there. Click, click. I'll be looking at technicals today. Not really a trend. Maybe. So falls below, but let's see on the daily. Let's compress. Zoom out. All right. Let's see if it holds that trend. So I like this green horizontal line right here because that's a previous resistance, albeit there's 1, 2, 3, a bunch of resistance within this congestion zone, and the bottom of the purple box is a support basically, and we hit that here, so that's a support held as support. And this is a higher low on the previous low within the congestion zone, and it's pushing back above this trend. So if you zoom out further to like a weekly, you probably see that this trend line is pretty much holding in many regards. I'd like to see it get above the green line here, which was a previous resistance, albeit we got another one up here at about 21.28. Break above this congestion zone will be very meaningful confluence, suggesting that this is a good floor. You get good entries above here with a lot of confluence suggesting it's not necessarily going to go back further down. You could have big macro moves that push things in directions that, to a degree, a magnitude that's totally unexpected. But thus far, this is a wonderful chart, and in many regards, you could define this as just a period of irrational exuberance and aberration. Whereas what's pertinent is the higher lows, indicating the directionality of the asset over time. So that's my sentiment regarding Frax. Oh, we got into some technicals today. We haven't done this in a while. Jonas, morning from warm, sunny Colorado, baby. Woo, what a beautiful state. Hazim, grateful for every tweet. It's my pleasure, and they will just keep coming. Booster Dev from a V Multi says they will launch immediately after Solidly. I heard that as well. And of the entire conversation, that is the comment that stood out most to me from a poker perspective. A tell. If they're waiting for solidly, what's the relationship? What is the dependency? What is the functional integration? What is how is solidly consuming uh, multi? And it's not just from a token perspective. I speculate from a protocol functionality perspective. You could speculate so many things because I know where things are heading in 2022, and that's seamless cross-chain functionality between um, uh, the cross-chain protocols, hops in the list, and what's the other one? I literally have the worst time remembering their name. The other top cross-chain bridge. But the point is, and layer zero is in there as well. And these are all fascinating from a, a a feature release standpoint or a, an ecosystem functionality standpoint of where we're heading. You're not going to need to know what chain you're operating on. You're going to be swapping on exchanges, accessing liquidity from one chain on another chain. And that's just really what I want exposure to. So my sentiment regarding multi is a culmination of everything I presented to you guys. It has the leading TVL. It has the leading volume. It has the DeFi space is leading dev. It has integration with Solidly. The DeFi space is leading dev, producing an entire exchange that he's hinted is designed to be consumed rather than just be a destination for protocol consumers. So I expect integration of Solidly into DEXs as within the particular chain and speculatively cross chain. And multi could be consumed by protocols not just solidly. It just could go to other protocols too. And protocols as a service is really how you expand scale and scope. That's how you just really tap the TAM, the total addressable market, which is the entire DeFi space. And to do that, you really need cross chain, and that's exactly what multi does. So there's my TLDR uh, regarding multi today. Let's take a look at the chart real quick. So this was a nice breakout from trend, short-term trend. I'd like to see it get above the green line. We'll see what happens. That's at about 22.95. Only a couple of pennies off in many regards. But if you zoom out, so this was complete irrational exuberance, maybe some whales pushing it around to take advantage of a narrative that was at play. And it was just run up and just totally, cap gains play in most regards, and frankly, probably in all regards. But if you zoom out, that's the 4 hour. Let's go over to the daily. If you zoom out, it's just higher lows. That's all it is. This is just pure higher low after higher low after higher low, including a bear flag in many regards that broke to the upside, and just there's a higher low in here. I mean, everything on this chart is higher lows. Anything that is a deviation from the average to the upside, it could just be accounted for by irrational exuberance and market actors just taking advantage of what crypto does best, which is people getting taken advantage of. But there's the higher lows that are very expressive of the directionality of the asset over time, and that's what's most important. Time of the market beats timing the market in many regards. I'm not a trader. You guys know the deal. Um, Tyler, hey Noah, how do you stake multi? You cannot until they actually release it. And the tight integration between solidly and multi is what I was just talking about, my friend. Uh, oh, wrong comment. Um, yeah, speculatively paid in USDC, Tyler. Adrian, good evening, a pleasure, good afternoon. Hilda's in the house. Daniel, hey Cap, enjoying the show. Looking forward to a prospect of Convex going cross-chain, staking Frax, Curve, LPs, multi-chain, create a lot of protocol revenue for CVX, CRV holders, and VICVX. Yes, aren't we all? We'll see what Convex does. Uh, I have exposure to Convex. I have exposure to Frax, which is the DAO with speculatively or empirically, quantitatively, the largest position of CVX. And clearly, it's not a dominant position relative to total circulating supply, but that's not the point. From a DAO perspective, they are beating the other DAOs, and that is meaningful. Looking great today, Cap. What do you think about Sushi's future? Frog Nation, Synergy is now gone. I would assume they don't have a leader right now. You're still bullish long term. I have a position that is sized accordingly. My Sushi position I will retain. I have no interest in trimming it. Current position size is 1.64%, if that is indicative of my sentiment regarding uncertainty. Andrew, good afternoon, Captain, and the Rational Squad. Did anyone see gauges added to Beethoven X on Fantom ecosystem? You guys know it's all heading towards gauges, governance rights, and voting, and bribery. It's not going to be called bribery, it's going to be called something else eventually. So these are the types of things to look out for just in the broad ecosystem. I would say that what you're seeing with regards to that is a manifestation of what I was trying to say with my last point on my 2022 narratives. Widespread deployment and iteration of current monetary policy. A couple of days ago, I said that I was getting close to rewriting my 2022 narratives, and really, it's not the curve monetary policy. It's the notion of VE, revenue shares, the notion of gauges, notion of bribery, which will probably be renamed at some point, and stuff along those lines. And all of this stuff makes capital sticky in a particular ecosystem, or sticky to a particular protocol. Revenue share, bribery, revenue streams, get paid to not sell the asset and stuff like that. So this is quite interesting. So this last point that I made in December was is probably is better said in more detail and is much more than just the curve monetary policy. Chris, how does the integration with Solidex come into play since Multi signed up as a partner? Unknown. It's completely speculative what Solidex will do. It's speculative. It's not launched. It's not released. Solidly isn't released, but we could assume they're probably going to model it off of what Convex does. I'm not interested in assumptions. I'm not interested in speculations. Well, I'm interested in speculations based on something that already has directionality. It's like protocol hasn't been released. It's speculatively going to be incredible. Let me buy now. There's no history, there's no traction, there's no TVL, there's no daily active users, and that has a risk profile that I don't find appealing. But if you're talking about speculation of where multi's heading, the directionality is quite clear. We have a TVL, we have a daily transaction volume, we have a daily user base, daily active users. We have integrations everywhere, including all the major protocols. We have consumption by Solidly, which is pretty much has writing all over the wall at this point. So that's a good way of how I think about what I take positions in with regard to history of the asset, entrenchment, directionality, and then you could speculate. Then and only then do I speculate on where things are heading. And that plays into my position sizes. Uh, Chloe's in the house. Always a pleasure. Welcome. Booster, how come Multi does next to nothing in terms of marketing about their upcoming VE Multi model? Because they don't need to. Geld's in the house. Fugu, hey Noah, what will happen during the market crash? How will the cash flow in crypto? I don't like the word crash because it's nothing ever happens in a single event. What you have is markets. What you have is cycles. What you have is capital flow. You have capital flowing into and out of the crypto space, and that's really just an opportunity cost analysis in which over time it is just rational to conclude capital is just going to flow into the crypto space at a greater rate than capital flowing out of the crypto space. Where the hell is the opportunity in the legacy financial system? I mean, what's the difference of playing with the crypto markets as compared to tech equities? I mean, literally, PayPal's down 60.95% in the last year. It's just been absolutely gutted. Last half a year, last 6 months. That's just a destroyed chart in all regards. Clearly, it doesn't move with the same ferociousness and volatility as the crypto space, which is expected, but it's doing basically the same thing considering the the intervention that has been done and the increase in circulating supply of dollars that has occurred in many regards. Where's the capital going to go? And it's introduced this extraordinary volatility in legacy equity markets. Just the amount of capital in legacy equity markets has exploded in good part by stuff like Robinhood and zero cost transactions across all the major brokerage houses, and just the retail participation is through the roof. It's historic levels. So what you have is substantially increased volatility when it does occur. Gal's in the house, always a pleasure. Aaron, seems like a big divergence happening right now between crypto and tech stocks. It depends. It depends. Let's look at take a look at Nasdaq. So what do you got on Nasdaq versus the S&P? It looks pretty much the same. You got an inverted hammer followed by you got a hammer followed by an inverted hammer. This is below the 50 SMA on the weekly. Let's go out to the monthly. I want to look at the Nasdaq on the monthly versus S&P on the monthly. That's the middle of the Bollinger Bands. Let's remove that. So right now, that's the 10 SMA up there. Nasdaq look like shit. Let's go over to ES. I mean, I think inflated tech equities have a big problem. I mean, at least ES on the monthly, which is S&P futures, never broke the 10 SMA to the downside on a candle body close. That is a massive hammer. That's not a hanging man. That would just be like a hanging 2,000-pound man. Albeit we have an inverted hammer. So a massive hammer followed by an inverted hammer above the prevailing moving average. What I would look for is a follow-up monthly candle, but an inverted hammer is indicative of trend reversal to the opposite direction. Let's go down to the weekly. Oh, there you go. That's a 200. That's a 50 SMA moving average. That is a hammer followed by an inverted hammer with the 10 SMA holding as resistance. This is on the weekly, so we're going to look to next week. This is quite indicative of trend reversal. It tried to go down. It couldn't. It tried to go up. It didn't, but it did try to go up. Both of these, the hammer as well as the inverted hammer, it tried to go up. With the hammer, it did go up. With the inverted hammer, it tried to go up, but didn't. But the fact that it tried to go up is suggestive of directionality sentiment. So it's interesting that it got to the 10 SMA. And in this instance, you look for the following candle to get a better sense. Like if you start to see a hammer falling rather than an inverted hammer, that'd be interesting. Or maybe an inverted hammer that hits the 10 SMA as resistance again, but the candle body close happens to be above what this week's, which will be last week's candle body close. That'd be quite interesting, followed by a third one that does break the 10 SMA to the upside. There is bullishness to come out of this. Technically, we are in a higher low. No, we're not. What about even? No, we are at a higher low with candle body closes, if you see right here. Horizontal line. We'll go off the green one. So look, there are higher lows going on here. There are lower lows with regard to the wicks. It's very uncertain territory. It's nice to see bullishness in the crypto space, though. We're seeing it across the board. I'm sure folks are seeing it on Bitcoin for folks that actually play that asset. I don't know. I don't really have much interest in it. CVX looks good from a daily MACD with a bullish signal cross. Nice to see a green candle for the first time. Green bar for the first time in a while. RSI broke through signal. Looks like resistance flips support in many regards, and that is reflected on price action. I think so obviously the fork is barely holding on to the bottom bar. Whether it's relevant or not, I don't know. It's not useful right now, but obviously these are two. I'd probably start to redraw this. Move this over here, and you go something like this. So obviously has depressed appreciative directionality compared to the last two highs and lows, but this is probably where I think we are. That's a good representation. Higher lows on the daily. Some nice wicks to the downside that were bought up. This does have trend reversal to the upside written all over it with these two relatively large downside wicks that never hit a lower low as compared to the low set on January 27th. That's nice to see. There's no bullishness on the chart other than this hope that broke through the TWAP on the daily. We want to see it get above the 100 SMA. Love to see some sort of geometry surrounding the first bar of the fork. A little bit of resistance on the 10 SMA. Is that the 10 or the 50? Oops, sorry. That is the 50 SMA. We'll see what happens with resistance at the 50 SMA on the daily. Let's go to the 4-hour for the fun of it. Yeah, there's the 100 SMA getting hit. This is the 200 EMA in the light blue. So resistance right now. So it's not bullish. There is no bullishness in these markets. By definition, this is a bear market rally. Bear market rallies rally right into moving averages and resistances. It's nice that it's above the guppies. This is a 4-hour candle, so we still have a couple of 4-hour candles left in the day. It'd be nice to see it push above the 100 SMA and fall down and have the 100 SMA hold as previous resistance, flip support. We'll see what happens there. Um, Hilda says, Noah, why become your interest in CVX bigger than CVX CRV? No particular reason other than CVX is higher in the food chain. CVX consumes and dominates CRV, and they control the majority. So I like to own market leaders. So I've talked historically about the food chain, which is convex consuming curve, and then protocols are consuming convex for control over curve monetary policy. And I've talked about thought processes, why own redundant positions in the food chain, which is interesting. Um, and at one point, I didn't think a curve convex position was necessary if you just have the consumer of convex, which makes sense. But in retrospect, convex does stand out, and they're going to be consuming other protocols as well. So obviously, CVX FXS is getting folded in, and frankly, the total addressable market as they add more and more protocols is unlimited. It's the entire crypto space. Anything with a governance asset, Convex has shown to be able to gain dominant control of. And that's powerful. So there's so many narratives. There's a lot of contradictory narratives at play. And ultimately, you have to settle on one of them. And your portfolio is a manifestation of the narrative that you settle on. So contradictory is, overexposure to a food chain where convex consumes curve, and then Frax consumes convex. Why own convex and curve if Frax is giving you exposure to convex and curve? But then you have the narrative that convex has potentially massive scalability. It's going to be consuming CVX FXS, and it could just scale the entire list of governance assets across the DeFi space. So it has a separate narrative. So, and I've chosen that for the time being. Um, Hilda, no, it's not because of price action necessarily. And I'm not interested in trading. I have interest in crafting a portfolio, one that I'm most comfortable with, meaning I could sleep on it, and the story that I could tell about it, dinner table investing, gives me peace of mind, and I'm able to relax, and I'm able to focus on other things like work that I need to get done with. I got a bunch of meetings later today. And that is the goal. That is the intent and desire of the work I do to create the portfolio. You saw now the stock market have up and down swings like crypto now, with Meta and Amazon going up and down 20% in one day. Austin, it's insane price action in some of these tech equities. Absolutely insane. And the narrative is going to change over the coming years where historically there was inefficient to deploy capital to the crypto space because of the volatility, but because of the financialization of frankly, the American economy, the tech equities are manifesting properties and volatility that we're historically accustomed to in the crypto space. 20, 30% moves in trillion-dollar market cap assets. They've never seen anything like this. But yeah, we have. So I don't have much empathy for them saying, "Oh, we're not going to touch crypto because it's too volatile." Yeah, well, welcome to crypto and tech equities, buddy. Does Meta look attractive to you at all now that is so much cheaper? I'm not interested at all in tech equities. They are boring as fuck, just saying and being verbally honest. Noah, can you please check FTM? Yeah, I'm interested in FTM as well. I wouldn't mind a validator. So I obviously have a bit of TA applied. Um, there we go. So we're on the weekly price action congestion zone below the 10 SMA on the weekly. Let's go to the daily, see if we get some other moving average insight. So it's still within the price action congestion zone that prints on the weekly. It's above the 200 SMA on the daily. It's below the 100 SMA and the 50 SMA. We got a 50 SMA cross of the 100 SMA, which is a bullish cross. Directionally, if you zoom out, you go to the weekly. It's bullish directionality. It's the bottom line. You could chalk up any of this shit to irrational exuberance. People just blowing the price action of the asset way off, like time weighted moving average. Let's show the TWAP. So not that bad, not that bad. Let's go back to the daily. This is a bear market. This is a bear market, and look at the price action. What do you have in bear markets? You have rallies that hit resistance. You have rallies that go into moving averages. It's a perfect example of a bear market rally. Perfect example. It's being rejected right now below the TWAP, or at least there's sell pressure below the TWAP. Maybe buyers come in and push it back above, but overall, the sentiment in the markets is that of fear, that there's uncertainty with the macroeconomic situation in countless ways. And I'm not expecting much more than bear market rallies, even for something that is the largest position in the portfolio right now. So this is a bear market rally. It's not above any previous highs. So there's no higher highs that are even remotely in play on a day like today. But what you do have is a macro setup of directionally appreciative or directionally appreciative macro setup. The big picture on this is higher lows across the board. I mean, literally everything drawn on here is higher low after higher low after higher low. Even a bullish break from a bull flag, a bear flag. Very interesting. Do you believe in this BTC ETH rally? Sure, of course I do, Dave. It's a good bear market rally. I hope I explained a little bit looking at convex. We looked at Fantom. These are bear market rallies. Even this is a bear market rally. There's no bullishness in this. This is totally a bear market rally. You could play these from a technical perspective and extract some capital gains. Where the bottom is of the bear market is unknown. It's nice to see this degree of support. These series of higher lows is a macro bullish trend direction, so it's technically bullish, but clearly we're not printing higher highs, so we're not a bullish market. Overall, I'm very bullish on this directionality, and there's literally zero technical indication that this directionality is shifting anytime soon, and that's quite interesting. And even on Fantom. But it doesn't mean you can't have a lower low down to the 200 SMA as long as it remains higher than this previous December timeframe low congestion zone. You're still in a appreciative, a bullish directionality on the longer time frame. This is the bounce many will be selling into. They all sell. This is a classic bear market rally, Dr. T. By the way, Dr. T is in the house, everybody. I'm just saying. It's the doctor. Hope everything's well, my friend. Hola, compadre. Oh, I nailed you, Dr. T. Do you believe in this BTCF rally? I handle that. Appreciate sure. You're welcome, Hilda. You're very welcome. Dan, can you explain the validator opportunity for FTM and others? Yeah, validators for Fantom and Avalanche and a POS node for Ethereum or an Antminer or whatever proof of work hardware desired for Bitcoin. These are all producers. And, there's going to be an opportunity cost analysis because if Fantom's going to give you like 8, 9, 10, 11, 12%, all right, it's not that bad. Can you outperform? What's the capital investment? Maybe it encourages you just to sit back and relax and watch what Fantom does over a 5-year time horizon. Maybe it becomes somewhat of a bond where it's just a passive income. And Fantom, if it takes 100,000 Fantom after the vote to create a Fantom validator, and Fantom goes to $20, and you got $2 million cranking out 10% a year. Oh my! That's a very nice thing that you bought into for 200 grand. It's worth 2 mil and it's cranking out 200 grand a year. You get 100% ROI on your initial capital every year that has exposure to a volatile asset that has directional appreciation or is appreciating directionally upward, some shit like that. So Fantom validators are quite interesting, even an Avalanche validator, and I'm quite interested in a variety of other chains. And you guys know, many are probably staking Cosmos, Atom, and everything on the Cosmos Hub ecosystem is you're delegating to validators, so you're getting your own revenue streams there as well. It's very interesting how to piece together a structured portfolio or a structured way to attach yourselves to the narratives in these markets. Hey Noah, did you read Lynn Alden's article on proof of stake? I have not lately, and I don't know which article you're referring to, but I'm sure anything that she creates is going to be impressive to say the least. Rupert, what's up, Noah? Always a pleasure. Chloe, TVL number 4, good time to accumulate. Good in capital letters, express prudence, express patience, and know that this is a bear market rally. Entries will be hard, entries will be sold, meaning you'll buy an entry, but it's going to go up, but it's going to be sold at resistance. Folks are looking for the price to go up so they could sell and exit positions to have that optionality. So it's not a bull market. It's not like you bought down here and it's just ripping higher low after higher low and higher high after higher high. I mean, this is a bull market. It's 2,000% returns. So we're not in this market. No higher high, we have a higher low. So this could shape up to be something like this towards summer. This would be Fantom trend line. We'll draw a horizontal trend line. Let's say we do something like this. And then you have directionality. So you have a massive ascending triangle. Something like that. And paint. So one dip down. Let's say this gets rejected at the TWAP. You have two dips down, and you break up again. And then you have 3 trips down, and then you don't get up, and then you get the breakout. So this is the type of thing that plays out with ascending triangles, usually about 3 waves, give or take. 3 dips down is what I like to see. So we're on 1, we're on 2, you hit resistance, you fall back down, and then you break out. So anything you get now is not a bull market. You're going to hit resistances. You're going to have the price fall again. Unless the Fed wants to juice another $2 trillion into the market, and then you're going to have a breakout across the board, and you'll just obliterate historic trend patterns, and maybe have a breakout here in April. That'd be interesting. Saying I have more time to build positions until there's a real bullish uptick. Yeah, there's no bull market. This is certainly not a bull market. You get good entries, but I would expect at least unless the Fed intervenes, unless they say, okay, we're dropping rates, or when we're going to reverse course, and all of a sudden futures markets start saying there's only going to be 1 rate hike instead of 7 or 0 rate hikes. That'd be a massive change in the macro narrative with regard to policy effects on the markets. And that's the only way we're going to get a significant difference in these particular trends. On current trends, if they remain unchanged, unless there's policy intervention, you're looking into summer, middle of summer, before we start to see some sort of potential continuation, unless obviously things start to deteriorate, which is another story, in which case maybe it breaks down and you get a fat wick to the downside and you get a good entry. Because if you have a fat wick to the downside, then you're certainly going to get intervention, and it's going to be a wick right up, and then you're going to have continuation as the transfer payments come in and the Fed's balance sheet starts ripping to the upside. So there's a lot of considerations for how to play these types of markets, and just what's most important is to respect the current market. And it's certainly a bearish market. There's no bullish pressure in the current market, so rallies will be sold at resistance. Thoughts on Bulls Chain? It's interesting. I have zero interest in it from a capital allocation standpoint. I'm quite curious because if I'm going to get a duplicate of all my assets on it, I'm probably going to engage with it. It's the largest airdrop in history, so that's cool. I consider it an experiment. Um, we'll see how it plays out because obviously the contracts get copied, the assets get copied. That means jack shit. That means you still need the user interfaces to interact with the protocols, with the contracts that are deployed on the network that is being forked. So you need huge amount of client-side development. Um, maybe I don't know how that's going to happen because just copying the assets and just copying the contracts is literally only half of what's needed for these protocols. Then you don't have momentum, you don't have lindiness. The trust has to build. Whatever it's going to be, FM, it's going to be a long road. It's not going to be quick. It's not going to be, just like glory and awesomeness. What he has created, what Richard created, it's a good idea. It's very marketable, but it is grossly underestimated, grossly underestimated the complexity of what he's trying to do. And I'm extremely curious how it plays out. What are they going to do about the user interfaces? So it's not as simple as people are thinking that, oh, everything I have in Ethereum, I get a duplicate copy of. Yeah, but there's zero user interfaces to interact with. It's just the contracts. And the first thing they got is the DEX. Great. So you could trade your assets. That's cool. There's a lot of DEXs, and Elron has a DEX. It doesn't mean it just explodes. It the maturation, the growth of an entire ecosystem is an organic process, a trust building process, capital flow, monetary velocity. It's just most important thing, FM. It's not something to be exuberant about, uh, but it's something that's downright fascinating to see what happens. Chloe, you're very welcome. Scott, well, can we talk about Rook? Yeah, I wish they had more bullish directionality or appreciative directionality of the asset because I love what they do from a tech perspective. I love the team. I love everything about them, but this is a shit chart. This chart is toast. Rook USDT. Let's look at why am I getting such horrible charts? Let's go over to Deck Screener. 3.2 mil of liquidity. Let's go out to the weekly. Oh, nice bullishness. Where you bullishness in a bear market. The chart's horrible. Albeit this is a massive falling wedge, but that is not indicative of bullishness. That's indicative of trend reversal. So, if you want to play it, but I'd be very careful. There's a It's just it's not on most people's radar. They don't understand how powerful the technology is. It reminds me of like Alchemist in many regards. That this is a trend reversal candle or a trend reversal trend. You know what I'm saying? It's a damn falling wedge. So that's pretty cool to see. It's just not on my radar from capital allocation because it just I want cash flow and they talk about interesting things. They bought some CVX and the Treasury and how MEVs converted into Rook purchases and they build the Treasury or they pay out the MEV denominated in a Rook and then they take in the MEV as Treasury. So they have a massive Treasury, but it's just not there. Um, and that's gut. That's just gut instinct. It just does not have the characteristics of an asset that I want to include. From a protocol standpoint, it's breathtaking, and you know who's building this software, deeply related to the Ren team, so it has great things to say about the tech and the software. But this chart reminds me of like Aave. It's like everything V3 is doing is brilliant and such lindiness and trust and established everything about it in the markets and legacy finance integrations. But come on, hey, let's go over to Trading View. Aave USDT. Let's go over to Binance. Zoom out. The chart just sucks. This chart is horrible. I mean, I guess it's a falling wedge, but I have a microscopic position in it. You can have the best narrative in the world, but if the technicals don't match it, it doesn't warrant inclusion in the portfolio. Now, obviously, I may be proven wrong, and Aave could be the biggest thing since the banking system, which is why I've allocated 0.53%. I don't want exposure to this directionally horrible chart, albeit it's a higher low from a 2020 standpoint. That's just horrible, horrible chart. BNT, USDT, I absolutely love their history. I love their technology. I love their developers. Very, very excited for their V3, but holy crap, that chart. So I have a position. I have a 0.61 position in Bancor. It's a little bit larger than Aave. It is higher lows, but look, this has Aave written all over it. And this has irrational exuberance written all over it. I don't want large exposure to it until the health of the chart improves. It doesn't look like this. Higher, low, higher, low, higher, low for an entire, go back to August, July on this chart. It's just higher, low written all over it. So it's a big difference. Even curve. Curve is the best example of a higher low chart. You go out to the monthly on curve and it's just higher, low, after higher, low. It's just a wonderful chart directionally. And my sentiment is that it's going to be a good income producer. Everything I've always said about Aave is still the case. Only in hindsight, we'll know if CVXCRV produces more cash flow than the CVX via the bribe mechanism. Got higher low. It's above the TWAP on the monthly. It's above the 10 SMA on the monthly. It's a great asset. You got an inverted hammer followed by a hammer. You want you a trader is going to hold it and they're going to look for the TWAP and they're going to sell at 429 from a 290 and get a nice rip off of it. And that's a solid bear market rally. But there's no reason you can't have retest of the low, which is exactly what happened here between May and July. Yeah, look, isn't this perfect? This is such a perfect example of a bear market rally. Bam, right into the TWAP, retest of the low, bam, right into the 10 SMA, retest of the low. So that's exactly what's going to play out here unless macroeconomic conditions warrant bullishness to overcome the bearish sentiment on the market, which is a breakthrough the TWAP and turning TWAP into previous resistance flip support. So, we'll see what happens, but I would expect to sell at around the TWAP. So that's the type of position you're taking if you take an entry in a market like this. You'll probably get a lower low at some point. You probably get back in at 250 after it breaks to 4.25. It'll come back down to right around there, which is exactly what we saw here. Quite interesting. So we have historic analogy to have reference on. Let's keep it going. Talked about Rook. There's a section in the article, stablecoin centralization problem. Interesting to get your thoughts. Yeah, I just don't know of it, but I'll get back to it. Maybe we'll talk about that. FM Alexander, PulseX biggest AMM ever. Yeah, probably is. It has everything that he's building has freaking massive written all over it. It's definitely interesting and impressive. It's going to be huge. That does not translate to a position. I do not like, but this goes back to like what we started some conversations earlier with. I don't deploy speculatively to something that has not been released. I deploy speculatively to something that is live. It has TVL, it has user base, it has cash flow and velocity, lending and borrowing, and just all this vibrant activity. I mean, PulseX is going to be big with regard to value, but it's not cross-chain necessarily. And what's that volume look like cross-chain? And what's the volume on the AMM look like? So all of these are critical pieces of quantitative information that we don't have. So maximum risk, not suitable for a portfolio like mine, but I am overwhelmingly curious how things play out. Scott, thanks for covering. Rook has been hammered. ALCX V2 on its way. Are you familiar? I am not. CX. I'm sure whatever Scoopy comes up with is going to be interesting. Same with Badger. Damn, this chart looks horrible also. Man, you can't buy into this stuff. There's no bullishness in this at all. I mean, you guys see exactly why I've deployed the size positions I have to like any, which is multi, and stuff like Frax. The chart loads. It's higher lows and irrational exuberance, and it has this price action congestion zone, and even Curve has a great chart. Historically, I love this chart. You guys know what I think about the monthly chart on this thing. It's just a wonderful monthly chart. And even convex. Convex, we redrew the fork. Let's zoom out to the daily. I mean, directionally, this is upward, just with extreme volatility. But combined with the narrative that a variety of protocols are going to step in with $25 million buys, this is a nice bottom, especially in the 200 EMA, the 200 SMA, and the daily down below. This is a directionally upward chart. It doesn't mean you're not going to have massive volatility. I mean, look, top to bottom, this is massive volatility. But what matters is directionally upward. And that means the protocol is established. That means the protocol is entrenched. It has a mode. It's going to be growing, and so on and so forth. It's going to be consumed. And these are the big things when you zoom out on the time horizon, and you have something other than a daily time horizon. 6 months, a year. So what you want to do from those time horizons is try and get decent entries. To do that, you have to get a sense of macroeconomic conditions. $2 curve. Let's take a look. Let's go over to the weekly. Let's see if we'll get that. I don't think you're going to get $2 curve. It's not impossible. If I shed some gut instinct on this thing, I'll give you a region. I mean, all right, fine. I mean, this is a heck of a congestion zone. Let's do here. I mean, that is a serious congestion zone. It'll take serious psychological pressure on the markets. Uh, if this breached, it would not be healthy because look, this is a previous support, a previous resistance. Let's draw the horizontal line there too. Trend line, horizontal. No, horizontal. There we go. Sorry. So that would be a heck of a breach to the downside if we got below $2. I mean, if the market shits itself, macro conditions are horrible. I got a daily or a weekly, see a massive wick below, but it holds that with the candle body close. That's like worst case scenario, but this is a good statement. How could you have a $2 curve? It takes a lot of sell pressure to get down there. If we, considering this wick, look at this, damn, look at that huge hammer. That is a massive, massive hammer. That's the bottom line. All right. I think we covered a lot today. I hope that helps with macroeconomic conditions, the nature that we're actually in a bear market. It's not bullish. We got some big macro headwinds, political complexity going on across Europe and into Asia with Russia versus NATO. And that's the whole thing unto itself. But there's just a lot. There's a lot going on, and the financial conditions are not healthy. There's uncertainty all over the place, but there is definitely indications suggesting policy walkbacks, maybe no tightening at all. And I don't think we're in a position necessarily for easing. That's usually a defensive position when policy is talking about because they can't ease. They would be heading into negative territory, and that's not something I necessarily see them doing. Albeit, what's most pertinent is that Fed funds rate is greater than that of foreign sovereigns, and that's really all that matters, in my opinion. And we'll see how it plays out. But it's Friday, and enjoy the weekend, relax, and try and get away from the computer. I know myself. I struggle with that significantly, but we do our best. But that's the deal. Friday, February 4th, 12:20 p.m. I wish you all a wonderful day. Tell everyone to subscribe. You know the deal. After party on Discord with the most rational community in the entire crypto space. I will see you again Monday. See you then.